Okay, well, away from elections and on to earnings. Yes, it's a very busy week for us. There are two important market moving events. So now that we've addressed one, let's talk about the other, and that is earnings. Corporation Bank has come out with its numbers. Disappointing set, loss of 6,500 crore rupees versus a profit they delivered in the previous quarter. This time the loss has actually widened from what it was in the corresponding quarter as well. NI down 9%, gross NPAs and net NPAs, however, have shown a bit of an improvement. I think that's the only saving grace. So let's talk then with PV Bharathi, MD and CEO of Corporation Bank. Thank you for joining in on ET now. First, let's talk about that bottom line figure. What are the factors that have led to that loss figure widening in the fourth quarter?
See, as you know, the bank was under PCA and our net NPA as on 31st December was around 11.47%. Now, the challenge for us was to bring down this 11.47 to below 6% because that is the most important factor to come out of PCA. So, with the infusion of the capital and plus with our own efforts to go in for recovery and upgradations, we had to bring down this net NPA to less than 6%. So, we had to make a higher provisioning of around 11,600 crores of provisioning had to be made to bring down this net NPA to less than 6%. So the additional amount of loss which you have seen now in 2018, we had made a loss of around 1,800 crores. And now we have made a loss of around, that was 4,000 crores was the loss in March 2018. Now the loss has increased to 6,332 for March 2019. This additional loss is only on account of additional provisioning. We have taken substantial care to provide not only for the existing accounts, the additional requirements because of the slippages, aging provision, fresh NPA provision, additional provision wherever we felt recoveries are challenging. In addition to that, we have also anticipated some slippages and made some provisioning in advance so that we will be in a position to control our net NPA to below 6% and even for the coming quarter.
Let's shift focus to your asset quality picture. Then your Q4 absolute gross NPAs was around 20,000 crore rupees. How has the trend been for slippages as well as recoveries and write-offs in Q4 versus the previous quarter?
Quarter on quarter, if you see, we have been bringing down our NPA by around 2,000 crores. So in addition to that, we have also been effecting the cash recovery by way of initiating action, immediate action on all the accounts which are slipping, where we brought around 4,300. In addition to this, there is a constant monitoring of the special watch list. Both under 1, 2 and 0 is being closely monitored, and that has helped us in the upgradation of around 6,000 crores. So going forward from this present trend of around 2,000 crores per quarter, we expect that our slippages will come down to around 1,200 per quarter. So we'll be in a position to contain the slippages and ensure that we are able to upgrade or recover the amounts and contain the NPA at a level where we can maintain a net NPA of less than 6%.
All right. Ms. Bharathi, if you could, for the benefit of our viewers, share some numbers as to what will your stressed assets, including IL&FS and the Reliance ADAG Group exposure be like, and what kind of provisions are likely for stressed assets in FY20? You mentioned that you've taken a lot of provisions in this quarter, and that's the reason why your number has been, your loss number has widened. So what can we expect in FY20 then?
As of now, we have actually gone through the entire portfolio of our advances, I would say. Because if you can recollect, almost from December 2017, we have been taking a recovery stand. We have screened through all the existing portfolio and we have brought down our stressed asset quality to a greater extent. So as of now, I can say we have sort of cleaned out our balance sheet, and we should be in a comfortable position going forward in March 2020 as far as the NPA figures are concerned. Now coming to our exposure under IL&FS, under ADAG and the other companies, yes, NBFC, we have got a reasonable exposure, and we have got around 16,000 crores of exposure under NBFC, out of which nearly 6,000 crores is towards HFCs. And HFCs also of smaller amount, there is no specific concentration of HFC finance over there. and we have got another 6,000 crores of government exposure. So that leaves me only with another 2,000 crores of the general exposure, which can be very well be controlled. And ILFS, we have an exposure of around 750 crores, out of which 350 is already NPA and the other accounts are being monitored. Coming to ADAG group, we have got an exposure of around 1,655 crores, and out of which 673 has already been made NPA. So we are following up for the recovery of the balance amount. And DHFL, we have got a small exposure of around 630 crores.
Ms. Bharathi, there is a provision diversions of around 622 crores for FY18. Also, gross NPA diversions of around 382 crore rupees for FY18. Can you give us more color here, as in what kind of the accounts or the sector where there was RBI divergence? Also, would you see FY19 diversion as well?
See, we know the two divergent accounts which they have given, actually we had already represented. Okay, and comparatively compared to the previous years when we had around 2,000 crores or so, this divergence was only on account of technical reason. It was not because of the stress in the account. It was only because of the technical reasons that the divergence was reported. But however, as per the instructions of RBI, we have gone ahead and provided for the same.
All right, Ms. Bharathi, thank you for joining in. Good luck once again with FY20 as well. And thank you once again for joining in with what happened in the fourth quarter for Corporation Bank.